I think markets are much more focused on inflation reports and CPIs next week and the June FOMC meeting on Wednesday. And the second, which of course we think is going to just show a continued improvement in inflation. But the second is that stocks really historically have done well in the week following the release of the employment report, rising roughly 70% of the time. And it implies roughly 70 to 80 points in the S&P. Of course, it would be better if it was a soft jobs report, and it wasn't.
Well, it's funny you say that. It would be better if it was a soft jobs report, because I think the market spent a good amount of today deciding, what it was. Was it good news is good news? Good news is bad news? I mean, if the market doesn't necessarily need rate cuts, why is a softer report better? Why can't we just be happy with good news? Labor market's strong, economy's hanging in, don't need rate cuts, and still may get them later this year.
I generally agree with you, Scott, but as you know, there's a faction of both market participants and the FOMC that view some of this data as too hot for them to be comfortable with. And I think, the more positive data points you get, the more you might actually start to see markets price in a hike. And so I think you're right. There is a Goldilocks window, but it's safer to say bad news is good news, because those actually clearly take away inflationary pressures.
I'm wondering if you think in any way that, thinking that June is going to be the point of the year in which we start to get this money off the sidelines and into the market, and how Goldman Sachs framed it the other day, talking about a, quote, wall of money coming in, but not really until July, that you could have some selling between now and then, but that the beginning of the third quarter, and thus the second half of the year, is the area to really plan for a wall of money coming into this market and then pushing stocks that next leg higher.
Scott, that dynamic is certainly at play for a couple of reasons. One, April was a down month, and I think a lot of institutional investors actually sat out May thinking April was the start of a bigger correction, so June is when money starts coming back in. But I think more importantly, since the end of 2022, I think a lot of institutions and a lot of high net worth individuals sort of sat out this market saying, hey, I'm happy earning 5%. By the middle of this year, if the S&P is up 15%, on top of missing 30% last year, I think a lot of folks are going to say, listen, I can't just sit on cash and earn 5% anymore when I'm missing out potentially on a 25% year for the S&P.
Tom, what'd you make of the fact a couple times this week we had rates go down and stocks go down? Not exactly the dynamic that many had been expecting, right? Because that's not the way that stocks and rates have been reacting, right? They've been pretty well correlated. Rates down, stocks up. Well, there were a couple of occasions this week where that didn't work. Why?
It's kind of hard to tell, especially day to day. But if I had to guess, we don't want to be in a situation where the economy is slowing so much that we've actually hit stall speed, so rates would go down.
Nvidia has consistently held investors' interest. The recent performance has intensified this focus, as the tech giant's shares have crossed a pivotal threshold, closing above $140 for the first time in nearly 3 weeks. This movement has sparked a fresh wave of speculation and excitement among investors, eager to decipher the potential implications. With industry heavyweights like Peter DiCarlo and Steven Straza offering their insights, everyone is watching Nvidia closely, anticipating whether it will rally to new heights or experience a sharp downturn. But beyond the short-term trading enthusiasm, what does this price activity truly signify for the future of this semiconductor powerhouse? Welcome back, everyone, to Investocracy.
That type of economic dynamic would scare stocks. So it's almost like bad news is too much bad news. In fact, maybe that's why today's jobs report kind of fits right in the middle, because it's actually good enough to tell us the economy is still strong, as you said, but it's not enough to actually add to inflationary pressures.
Tom, what if this market is just screaming out it's Nvidia's world and we're just living in it, right? I mean, if Nvidia's up, markets are good. Nvidia's not doing much. S&P can't do that much. Nasdaq's negative today. It's a one-stock story.
Nvidia is really a generational story for now, because, how many $3 trillion companies actually have doubled, so clearly Nvidia is important, but it's important because it's really one of the most important ways to get exposure to AI. And I think the AI story is early innings, as many people talk about. It's transformational in terms of productivity, and there's a lot of use cases developing. So as much as it might feel like a one stock market, as you know, there's a lot of stocks up more than 20% year to date, and I actually think breadth is likely to increase. So for investors, there's a lot of opportunities in the second half.
As the trading day ended with Nvidia's shares priced at $140.22, the atmosphere among investors was charged with expectation and curiosity. Traders, with their eyes glued to chart patterns, noticed that the stock had not only surpassed its 8 and 20-day simple moving averages, but was also well above its 50-day and 200-day moving averages. These bullish indicators typically signal a potential for continued upward momentum, possibly setting the stage for more gains on the horizon. Peter DiCarlo was quick to highlight that should Nvidia cross the $145 mark, it could usher in a tantalizing prospect of reaching a new high of $170 within the coming quarter. However, the volatile nature of the stock market reminds investors that with every stock market party comes the inevitable hangover. Jim Cramer offered a word of caution, warning of potential reversal if Nvidia's current momentum fizzles out without fulfilling its perceived promise, akin to a sudden crescendo moment that fails to evolve into a lasting symphony. The recent gains reflect a 4.84% increase over the past 5 days and a staggering 191.09% rise over the year, showcasing its resilience against broader market trends that have challenged many of its peers. The firm's stock performance starkly contrasts with the Nasdaq 100's recent dip and modest annual rise, underscoring Nvidia's standout position in the tech sector. This distinction is perhaps further exemplified in its ability to not just survive, but thrive amidst market headwinds. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
I mean, let's say at the start, it's down a little bit today because expectations were sky high. But this was a blockbuster quarter by Nvidia, right? What's clear to me now, and what I think the biggest takeaway from the call, is that the world runs on Nvidia. As Jensen said, AI is in full swing. He said this is a multi-year event. This is not just about training AI. This is about moving all the world's x86 architecture. All the applications that run on CPUs are going to be rebuilt over the course of the next 3 or 4 years on GPUs that are running machine learning. So I think that the market is going to have to digest that this just isn't about training clusters in 2025. This is about GPU data centers that are going to be built in 26, in 27. And so for us, our numbers came up. You saw that I think 10 sell-side analysts took up their price targets for the stock. We were buying it pre-market when it was down today.
Oh, you're buying it this morning?
Yeah. So, I think it was a blockbuster report. And I think, it's clear to me that the Intels of the world are going to continue to lose share, and the Nvidias of the world are going to continue to gain share. And if you want to bet on the tailwinds associated with AI, you have to have Nvidia in your portfolio.
Okay,
However, not all the news is rosy and filled with glory. The specter of regulations looms large as Nvidia grapples with an antitrust investigation by Chinese authorities over its acquisition of Mellanox Technologies. The echoes of Qualcomm's prolonged antitrust saga in China are not lost on industry watchers, who understand the potential complications that such investigations could entail. TF Securities' Ming-Chi Kuo has advised caution, suggesting that this investigation might linger without resolution for some time, possibly impacting Nvidia's trajectory and investor confidence. The shadow of regulatory scrutiny does indeed cast a pall over the otherwise bright outlook, prompting careful navigation and strategic foresight on Nvidia's part. Meanwhile, analysts remain divided yet optimistically watchful about where Nvidia's stock price might head next. Current projections span a wide range, with Rosenblatt forecasting a high of $220, drawing from Nvidia's robust fundamentals and market share expansion, while New Street Research offers a more conservative target of $120, taking into account potential market risks and external factors. The average estimate of $154.67 from various analysts hints at a modest 10.67% upside. indicating that despite the volatility, Nvidia holds much promise if it can adeptly navigate the tumultuous market waters ahead. The diversity of opinion reflects the inherent uncertainty yet tantalizing potential in Nvidia's future. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I think they were very artful in the way they maintained everyone's enthusiasm for the potential for Blackwell, where orders stand, the fact that demand is still outstripping supply, but they didn't ratchet up the excitement too much to put them into a position where they just can't win the next time they report. And that's really going to be the company's job going forward. It is already the largest market cap company in the world. It is already the most must-own stock in the world. There is no need to continue to put pressure on themselves to outperform and outperform and outperform. So it's harder than it sounds because they do have a really bright future. And the revolution is real. And the dominance of GPUs and data centers going forward is undeniable. And their market share position within that revolution is also undeniable. So they have to now do this quarter after quarter, give people realistic guidance, execute, ship products, hit those numbers, but not paint themselves into a corner that they can't escape from, where the market expects them to double revenue every year, which, of course, like mathematically will be impossible. So far, so good. I think Jensen understands the mission. I think he's accepted the mission, and I liked everything I heard last night.
While it is no small feat, Nvidia's performance thus far suggests a promising trajectory for those willing to ride the waves of market uncertainty. It is critical for investors to weigh the potential risks posed by regulatory challenges against the backdrop of solid market fundamentals and the buoyant sentiment that presently hovers around the stock. Nvidia's journey is emblematic of the vibrant, unpredictable world of stock trading, where fortunes can change with the close of the market. As the company continues to chart its course through a blend of innovation and strategic investment, the prevailing question remains: will Nvidia's ascent continue unabated, or is a new narrative waiting just around the corner? Engaging with such nuanced market musings not only keeps investors informed, but also invites them to share their thoughts, experiences, and strategies. In the spirited conversations that follow, what predictions will investors make for Nvidia's stock in the coming months? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.